Nigeria's banking sector today has approximately 11 female CEOs, but amidst current economic challenges and the ongoing recapitalization process, how well are banks really doing in the area of gender equity? Good day, it's another power-packed episode of Business Week. This week, Nigeria's equity markets appear to weather the storm after a global stock market sell-off, and the country's central bank brings back retail auctions to address FX shortages. Ghana launches its first gold refinery, and Google is ruled an illegal monopoly by a US court. I'll also be joined later in the program by two Amazons from the Association of Professional Women Bankers to look at the key highlights of their latest report on gender banking and the Nigerian economy. I'm here to help you catch up as always. If you couldn't keep up during the week, I'm Rolake Akinkunwe-Filani. Stay tuned. As always, we'll take a look at global energy commodities, a great turning of the tide from last week's oil and gas market outlook. Last week, we saw a market rout across board because there was a drop in Brent crude prices. But you see, the week ended on a positive note, 0.63% up on Brent and 0.54% WTI, but natural gas and RBOB gasoline are down. Let's take a look at global equity markets, of course, starting with Nigeria. The all share index ended the week on a positive note at the close of trading on Friday. It was up by 50 basis points to close the week at 98,592.12. Deals over 9,000, volume of shares traded 477.4 million, fair value of deals at 8.16 billion, and market cap ended the week at 55.9 trillion naira. Let's take a look at equities markets from other parts of the world. First, we start in Africa. The Johannesburg Stock Exchange ended on a positive note. It traded up at the end of the week at 0.47%, but Ghana almost flattish, negative note there slightly. Nairobi was up as well, but Casablanca in Morocco was down. Now my Wall Street outlook. Let's take a look at Wall Street. All a positive run compared to the previous week when concerns around the slowing US economy impacted the big stocks. But you can see a green sweep of the market. Dow Jones Industrial was up 0.27%, S&P up 53 basis points, same with the NASDAQ Composite Index. Now to my top picks, business picks from around the world. First, we start in Nigeria. Nigeria's central bank has reintroduced the retail Dutch auction system, which allows it to address some of the FX shortages. It basically sold a total of about $827 million under the retail Dutch auction system, getting my words twisted there. But good news in the short term for some of the liquidity challenges. We'll see how that system pans out with that reintroduction by the Nigerian Central Bank. The US Supreme Court has ruled that Google is an illegal monopoly, a US court, not the Supreme Court, I beg your pardon. And this is coming on the heels of a wave of antitrust legislation, which has been primarily in recent times targeted at many of the big tech firms. 4.5% fall in the share price of Google parent Alphabet there. And actually, interestingly, advertising on Google represents about 77% of revenues for Alphabet. So if future court cases do eventually lead to a breakup of the alleged Google monopoly, that could actually impact advertising revenues for Alphabet, the parent company of Google. So it'll be interesting to watch what some of the other court cases come out with over the next few weeks and months. Ghana has opened its first gold refinery in Accra, the capital. The Royal Ghana Gold Refinery is a bid by the government and the central bank to add a bit more value to the Ghanaian economy. Ghana, of course, is Africa's biggest gold exporter, also the biggest cocoa, one of the biggest cocoa exporters as well. And this refinery will create apparently just 120 jobs, around 500 to 1,000 indirect jobs. But this is seen as a major win for the Ghanaian gold sector and a bid to create more value locally. The Royal Ghana Gold Refinery is part owned by the Bank of Ghana and an Indian gold mining company. So quite a good partnership there. The Bank of Ghana owns only 20% of that refinery. China is challenging EV tariffs imposed by it earlier in the year, imposed by Europe, the European Union. in the WTO. China claims this is European protectionism at work and is also now threatening to launch its own onslaught against EU pork imports as well as French cognate exports from France to China. China believes that France is a big supporter of this EV tariff rule that was introduced earlier in the year. This WTO ruling, we're not sure whether China will win this case, but it could lead to a new frontier, new trade war frontier between China and the EU, and we'll be keeping a very close eye on that. And finally, Nigeria's central bank has approved quite a precedent here because it's approved a bailout as part of its approval of a merger between Providus Bank and Unity Bank. So the central bank is giving, in a letter to Unity Bank, is giving what it calls financial accommodation to the tune of 700 billion naira as part of a merger between Unity and Providus Bank. And part of that is meant to go towards helping Unity Bank settle its other obligations. It's a 20-year term loan, which the central bank has given. And this is interesting because just a few months ago, we saw the liquidation of another one of Nigeria's banks, Heritage Bank, which perhaps signaled to the market that there wouldn't be banking sector bailouts in the country. But the central bank obviously taking a very different view on the proposed merger of Unity Bank, Providus Bank. So good news there for Unity Bank in this merger. That's it for my top picks. So let's take a look at other news from around the world. Wall Street stocks saw their biggest drop in over 2 years on Monday, reflecting a global sell-off that coincided with investors and focusing on indications of a faltering U.S. economy. The sell-off that started last week continued earlier this past week following the release of U.S. jobs data, which revealed much slower hiring and a rise in unemployment to its highest level in almost 3 years. This heightened concerns that the greatest economy in the world will be experiencing a severe slowdown and the Fed might have delayed reduced interest rates. Well, still on the global stock market meltdown is probably going to impact Nigeria, according to some analysts, because of the ongoing banking sector recapitalization. Now, Nairametrics in its research said the big sell-off that occurred in Asia on Monday morning that caused the global financial markets to wake up with equities wiping out all the gains that they made in 2024 could come back to impact the Nigerian market. The world's largest cryptocurrency exchange, Binance, saw its net inflow reach incredible heights of $1.2 billion in a single day after significant sell-offs brought on by Monday's equity market fall around the world. According to Binance CEO Richard Teng, the amount of inflow on the platform is the largest net inflow day of the year. Richard Teng also credited the achievement to growing investor trust while citing data on the volume of inflows on Binance from Defi Lama. A group of Goldman Sachs economists led by Jan Hatzius noted that the likelihood of a U.S. recession in the upcoming year has increased from 15% to 25%. They pointed out that the July unemployment report appeared to be weak across the board. Goldman now projects that the U.S. central bank will reduce borrowing costs by 25 basis points in September, October, and December. Hatzius, on the other hand, says investors shouldn't be overly alarmed, noting that additional aggressive slashing by policymakers is always an option. In addition, J.P. Morgan increased the likelihood of a U.S. recession by year's end from 25% to 35%, citing a reduction in labor market pressures. In the first quarter of 2024 in Nigeria, food product imports accounted for approximately $689.8 million, or almost 17% of all Nigeria's FX expenditures on imports. This is based on data on the sectoral use of foreign exchange that is included in the CBN's quarterly statistical bulletin. Nigeria spent little over $4 billion on imports during the time under review, according to the data. In the most recent retail Dutch auction system, the Apex Bank of Nigeria auctioned off a total of $876 million to 26 eligible banks. In line with the goals of the bank, the central bank that is, the auction process took place on Tuesday, August 6th, and it attempted to improve FX liquidity in the market as well as relieve demand pressure and assist price discovery. This was stated by the CBN in a statement that was put online on Wednesday. Omolara Duke, director of the Financial Markets Department, signed it. The director provided an explanation of the auction procedure, stating that offers totaling 1.18 billion from 32 banks that were authorized dealers were accepted, while bids totaling $313 million from 6 institutions were rejected. And finally, the Nigerian National Petroleum Company Limited, NNPCL, on Monday announced the introduction of Utapate crude oil blend and a new crude oil grade into the international crude oil market. The spokesperson of NNPCL, Olufemi Shoneye, made the statement on Monday. He said from OML 13, fully operated by NNPC's upstream subsidiary, the Utapate crude oil blend commenced operations in July as its first cargo headed for Spain. Located offshore Akwa Ibom State in Nigeria, Utapate current crude oil production is at 28,000 barrels a day, with the potential to increase it to 50,000 barrels per day in the near term. Still on oil, in response to accusations made by Dangote Refinery, the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, has refuted assertions that it has been lax in implementing the domestic crude supply obligation under the PIA 2021. The regulator emphasized in a news release issued on Friday that despite continued difficulties in the oil and gas industry, it is committed to guaranteeing a consistent supply of crude oil to regional refineries, especially the Dangote Refinery. The controversy began when the NNPCL and the NUPRC were openly criticized by Dangote Refinery, the largest refinery in Africa, for not meeting their requirements for the delivery of crude oil. The refinery's management first claimed that there were large deficits because the NUPRC had not sufficiently enforced the domestic crude oil supply obligation. Well, that's it for our top stories.